All right. Hello, everyone. Thanks so much for coming. I'm going to be talking about in Ethereum, we trust the return of private money issuance from John Law's bank to Ethereum today. So my name is Otto Jacobsson. I'm the CEO of YAP Global. We are a PR consultancy in the space, been here since 2017, 2018, and been working with ETC since 2020. So very happy to do that. And I guess beyond the obvious question of press coverage and all that, we've really been thinking about what is the story of money and how is crypto changing that, interacting with that. So that's really what I want to explore a bit today. So this is not a technical talk. It's more of a historical overview and then asking a question about what we kind of want to see going forward. So as we were thinking about this, we were thinking about money and needing a coordination layer. So before central banks in medieval era up until about 1800, you had this was my thesis, that the church, Catholic Church or the church generally in Europe was like a moral coordination agent. That turned out to not really be the case as I looked into it. In fact, priests and the church invested in a lot of banks that failed, including private money issuers, and there was widespread condemnation of their involvement, basically. So that turned out to not really be the case. It was just a bit of a Wild West. Everyone could issue money if they wanted to, and a lot of people did. Then, of course, we had the modern era central banks with institutional coordination, and then now we're living in this very interesting time. We call it the crypto era, but where we have private money issuers in the form of stablecoins. And they're issuing them on Ethereum and other blockchains, but we're at ETC, so we're going to be focusing a bit more on Ethereum. And that leads to protocol coordination, which is quite interesting to think about. So what's an example of the pre-modern era of a failure? You might have heard of the Mississippi bubble. Basically, a young, enterprising Scotsman, John Law, went to France. He became basically the finance minister. He set up a bank, Bank Royal, which was allowed to issue money. Many others were issuing money at the same time. And he took over basically all of the tax farming, all of the tax collection in France, and he invested in the Mississippi Delta via the French sovereign, the king. And this led to a pretty crazy situation where the shares of the bank and the Mississippi company generally was listed on a primitive stock exchange, and it was directly exchangeable for paper money issued by the bank. So people wanted to buy the shares, therefore the bank needed to issue more money, and you can see how this drove demand in a speculative way for each other. And inflation within a couple of months was hitting 100% because, again, this was money that people actually used as money. It wasn't just something that they issued willy-nilly. And the peak valuation of this business hit 6.5 trillion in today's money, which is the second most valuable company ever recorded. And the most valuable one you might find interesting to know is the East India Company on the height of that business. Of course, it all collapsed spectacularly within about 6 months, and John Law was widely condemned, for example, by David Hume. And this is where I thought that the church acted as a moral coordination. Surely we should have better systems around this. But basically, people just carried on. However, there was obviously a lot of issues with this kind of structure in the fiscal economy. And you can see how there were bank runs, which indeed happened with the Bank Royal, where people were basically nervous and tried to pull out money at any sign of trouble, and the banks basically weren't very stable. It's also interesting to think about how much friction there was in the economy when you have different forms of money exchangeable, for example, for each other. We can obviously think of that in today's token swap market. There's a lot of friction there. We had a story a couple of months ago, about someone trying to swap 50 million on Aave and got basically wrecked. So we can understand how much friction there was, but you can imagine you're going to buy milk and the merchant have decided we're not accepting your form of money today just because we as a merchant have a view that this bank might fail. I mean, it's not a great system. And then finally, which I think is very interesting in today's world where unfortunately there's wars and rumors of wars, the state actually wanted a big-time financier, someone who could finance their wars. And private banks were doing this. They still do to some extent, I guess. But JP Morgan cut his teeth issuing government bonds to finance different wars across Europe and the world, really. So a lot of issues with that. However, then we get to the central bank era, and here we basically have a system where money is issued by committee, or it's decreed money by committee. It's a political process. And some issues with that, I think we're all kind of familiar with this as relatively crypto-native people. We have inflation and debasement. The money supply will expand, and the value of them, the hard money, will decrease. Bank intermediation, most money today is of course not money at all, really. It's commercial bank deposits, which is interesting for a further point I will make. And you need to kind of, it does affect the economy when bank goes into financial issues. So we are concerned, and the regulators certainly are, about the bank's solvency and their liquidity ratios. And then, of course, we have discretionary policy. We have the big experiment over the last 20 years with quantitative easing on a massive scale, which obviously led to an inflation spike after a couple of years. Who could have seen that coming? Well, you know, history would certainly tell us so. And then, very interestingly, we of course also have an issue with censorship, where it's not that, you know, you might be debanked, you might not be able to open a bank account in the first place and participate in the economy. So lots of issues with the central bank era. But the biggest sort of thing that I want to highlight here, and why stablecoins are obvious, is central bank systems, payment rails, were not designed for the internet. The SWIFT, ACH, Target were designed for batch settlement and business hours. However, in today's interconnected economy, we obviously want 24/7 settlement, programmability, and global access. And I think if we keep those three things in mind, stablecoins do become obvious, and on-chain payments do become obvious, which is, you know, good. And I think that's a good thing. However, it's interesting to think about the return of private money issuers. So we've gone from having private money issuers in the 1800s, central bank, and then now back to it. And I just want to make a point about Hong Kong here, because if you have visited Hong Kong and you've had physical banknotes, you might have noticed that they are actually issued by the commercial banks in Hong Kong, HSBC, Standard Chartered, and Bank of China. Now it's basically the government outsourcing the logistics of printing that, but still, it's a reminder that private money issues is the norm in human history. Central banks is the kind of outlier as money issuers, and of course this becomes. The continuation is interesting because it's widely expected that Standard Chartered and HSBC will be the first regulated HKD, the currency locally, stablecoin issuers under the new regime that's coming out in the next couple of months or so. But Tether and Circle, obviously being the biggest one, they now hold something like 2% of all US T-bill supply, so they are already one of the most important constituencies in the arguably the most important financial asset in the world. And we don't really have time to get into the political influence of that, but it will be interesting to see how that plays out in the next couple of years. So talking about Ethereum then, we probably all agree that credible neutrality is good, and Vitalik has written about this, and that, you know, it's a good thing. We certainly wouldn't want to keep anyone out. And the economic punishment and the incentives on Ethereum are, you know, obvious. If you engage in certain behavior, you will be punished. But is it enough, so to say, as we get into this new era? That's the question I'm asking here. And I mean, the social layer is a little bit hard to define. I guess this is part of the social layer, engaging in ETC and these kind of talks and thinking about it. But this is like super underexplored. I basically found not a lot of research and input into this topic. And I think it needs to be, because we're already seeing the collapse, of course, of various stablecoin issuers. Now, it hasn't been like a major problem for the real economy or for most of the space, because the stablecoin issuers that have collapsed have been pretty small, and it's impacted mainly financial firms and those kind of speculating in the economy. But moving on, So I use this line here, in gold we trusted. In the 1970s, of course, the US dollar went out of the gold foot as a result of basically economic situation in the country. And I'm sure you're all aware that the line changed from in gold we trust, and just one letter was replaced. And it now says in God we trust, since about 1974, I think, to be exact. So we have this situation where we're moving from having faith, in the 70s at least, in a specific precious metal to having faith in, you could say, a higher being. And today we need to tell a story why we should move to having faith in stablecoins as the dominant form of money, because I do think that it is obvious and it's just going to continue. And I don't think it's a bad thing, but I do think that we need to explore this social consensus around it. Basically, what are the kind of do's and don'ts? Is there rules around it beyond the base layer on Ethereum? So that is basically what I wanted to share with you today. We do think that we have a great opportunity now as stablecoins become dominant across the world to tell a better story and solve some of the problems of central bank money and address some of the previous issues with, in the pre-modern era as well. But so far, it seems like we're not learning that much from history as we move into this brave new world. So thank you so much for coming and listening. As I mentioned, I'm the CEO of YAP Global. We're a PR consultancy in the space. Would love to have a chat with you if you have any questions about this or any other topic that you think might be relevant. I think we have quite a bit of time for questions.
Yes, sure.
So I don't know if anyone, please.
I'm not sure if it's a question. I just want to enter a short discussion. Sure. Well, I'm a big proponent of Hayek's denationalization of money. Yeah. Basically, the concept that we need to privatize money. And I find it really sad that basically Ethereum has mutated, or with the stable coins, to basically a mechanism for governments to sell their treasuries and bring down rates in the end. Mm. So I would have, my vision would have been to have like a bunch of gold tokens and stuff like that developing as a means of payment instead of fiat. What do you think about that?
Yeah, I'm not making a sort of judgment call on that, but yeah, because it is obvious that, as I said, Circle and Tether hold about 2% of all UST bills, and government legislation in the US now, require them to either hold it in commercial bank deposits or UST bills, and obviously they're going to choose T-bills because that's where they make the money from. The spread, they pay you 0 and they make 3-4%. Yeah, I mean, David Hume said this in response to the Mississippi bubble crash. He said he basically argued against all form of public debt, and he said men are systematically biased, knaves, and unlucky. And I think we can see all three of those playing out in different crypto protocols today. So I'm not really, I guess, answering your question, but I think if we can remove the debt part or address that, then we shouldn't have these kind of systematic issues. I think that's it. Thank you so much for coming.